Welcome to Tech Brutal Effects, and today I'll be sharing a very important strategy for this week. Right, I'll be sharing a very important strategy to help you to be profitable this week. All right, as you can see on my screen, I want to give you a strategy. All my strategy are very effective and very productive. And in today's strategy, I'll be showing you how to use um, four indicators, combine four indicators for your confluence and your trading. All right. So we're going to go right into the setups of this strategy of these indicators. All right. Once we get into the setups, we can analyze it and know how to use them. Right. Okay. Now, the first indicator, I'm on boom 500 in 30-minute time. For this strategy, it is paramount that you use either your 30 minutes or your 1 hour time frame for all your crash and booms, right? And it's also important that you trade using your risk management. Know the number of risk you can take for each trade, and your reward ratio, you should be very conversant with it so that you don't make the mistake I made in blowing almost a $2,000 account because I was using big lots and I wanted to make it big, like the get rich quick scheme. That is not forex. Forex helps you to build your mentality about management, helps you to manage your resources. All right. So it is important, very paramount. It's paramount that you learn how to use these indicators to be profitable in the market. All right. So we're going to go right into the video, into the setups of the strategy. All right. What I have here is moving averages. All right. I have three moving averages. All right. Then I have a MACD um oscillator. I have a MACD histogram, sorry, a histogram, MACD histogram, to help us understand how to use and use the confluences. All right, so let's go right into the setups. All right, okay, so I have three moving averages, as I said earlier. So the moving averages we have must be on the chart window, not on the indicator window. It must be on the chart window. So the first moving average we have there is moving average 75. All right, moving average 75 period, that's period 75, shift 0, method linear width. All right, apply to low, then you can choose any style you want. Okay, then you click on done. All right, the second one is the moving average 5, fast moving average 5, which is exponential moving average, which helps us to understand the speed of the market, the magnitude of the market. All right, then we now have to compare it with a slower and a low linear weighted moving average. All right, so this is it. Period 5, exponential, apply to close, and you can use any style of your choice. All right, okay, so the next one is moving average 85 period, that's moving period 85, shift 0, linear weight also. So I'm using black because my background is actually white. That's why I'm using black. Then I'm using green for the fast EMA, which is the 5 EMA. All right, so you can use the two linear weighted moving averages. You can use the same color for them, so it can help you identify them easily. Okay, and the last but not the least is the almighty MACD. the almighty MACD. All right. Okay. This is the setup. We have the fast EMA to be 15, the slow EMA to be 26, and we have the MACD SMA to be 1. All right. The simple moving average to be 1. That's what we're going to use. Then you can use any of the setup. Okay. Then the levels we are using is the 25 and the 80 level. All right. Though we will not really apply that 25 and 80 level, but we would use the crossovers of the zeros. That's from the minus, negative, and the positive zeros. Okay. All right. So that's what we're going to do. Okay. Now, for us to use this strategy effectively, we must put into play some conditions, right? Some conditions. Now, when you watch, you can see a flattened EMA. You can see a flattened EMA, right? You can see a flattened EMA. So, okay, let me turn my screen so you can see it clearly. All right. You can see this the two black EMAs, which is 75 and 85. Okay. So we want to get a confluence, a point where they are intercepting. All right. The intercept is what we are looking for, and the crossovers. Okay. So once it's getting tightened, that is the two EMAs, you can see a flat ranging market here, a flat ranging market right here. Okay. You can see another one right here. So we want to enter the market when there is a move or a push of the trend. Okay. That's when we want to enter the market. We don't want to enter the market when the market is consolidating or a sideways market. We want to enter it when we see a signal for a move in the market. So for us to enter this market, we have to check, okay, is our MACD changing from the negative to the positive side, or is it just at the flat ranging point, or is it only in the negative or in the positive side? So our target is to enter the market when there is a crossover from the negative to the positive side. That is a confirmation. That means we have a confirmation right here. There's a confirmation right here, right here. All right. Now our target now is to enter the market when the green EMA, that is a fast EMA, crosses the double linear weighted MAs, linear weighted moving averages. Okay, so either it crosses from above or it goes from below. Anyhow, we want to enter the market and make some profit. Are we together? All right. So the first thing we want to look out for is this crossover right here. Can you see? There's a crossover we want to look out for. Now it crossed over and we have these bars, all these bars here, okay, above the 0 point. Okay, so we have this. So if we want to enter a buy, for instance, in boom, we want to long the market. So we want to look at this point. Yes, there is a crossover. So if we want to enter the market, you can see the crossover. You enter the market right here. Okay, now note your take profit size should be, or your risk reward ratio should be 1:3. 1:3 for some markets. Right, it's all dependent on you. If you want to make a huge profit from the market, or you want to stay longer. So if you want to stay longer in the market, you have to use the higher time frame, which is actually the 1 hour time frame. Okay, are we together? So we want to use the higher time frame. All right, let's use the 1 hour time frame. Okay, so once we look at the market right here, you see it. So if we're using the higher time frame, okay, if we're using the higher time frame, you can see this crossover right here. We can stay very long time in the market. Okay, you see it. So our stop loss should be below the immediate low of the linear weighted moving averages. Okay, right, all right. Our stop loss should be below this. This is the immediate low of the candles. Okay, so it should be below this candle or just at this candle. So if we calculate, we have how many pips from here? This is, if we want to enter this market, okay, from this zone, let's see, this should be our entry point. This should be our entry point. That's the second candle, the second formation of the bar of the MACD. That's where we want to enter the market. All right. So if we check it, um we have some let me see. Right, we have this. Let's check the peeps. How many peeps? Okay, we have about 33 peeps. That is, our stop loss is 30 peeps below. Okay, so now let's check for our take profit. We can take our profit after the correction of the trend. You see how many peeps we have? 110 peeps just in the market. And note, this is within a day trading, within a day trading the market. So if you enter the market with approximately 0.1 lot, 0.2 lot, you have over $22. $22. Okay, over $22. Then if you have higher equity, or probably you want to trade $100 account, $100 account can carry a 0.3 lot. So a 0.3 lot should be giving you $33. $33 or more. You get it. Am I correct? Okay, yeah, it should be approximately, should be around $33. Okay, so that is how you get opportunities, and you don't mess with the opportunity. All right, so all you have to do is figure out, okay, for instance, we have this kind of zone, this place right here. This is not a trend, it is not our trade, we leave it. So you see, it's efficient in 1 hour time frame too, but this is not what we want. We don't have to trade it. Okay, every everything you need is in the market. Right, you don't have to force the market, you don't have to push hard on the market, you just have to get the right opportunity for you, and you leave the market. Okay, now let me show you something else. All right, you can see false signals here. False signals. You can see a consolidation point. You can see consolidation point. Okay, see a consolidation point. We have this. Okay, we don't want to trade this. We don't want to trade this shit. Right? We don't want to trade this kind of market. All right? If we're using this strategy, we don't want to trade this kind of market. You see what happened here? It just broke out, and this what happened again. It has to cover the liquidity it has already opened down here and before going up. So all we have to do is wait for it to cover the liquidity, then we can enter the market. All right, okay, now watch this, watch what happened here, watch what happened here. All right, so if we wanted to trade the market, all right, here, just right here, you see what is happening right here, what is happening right here. You see a consolidation, which is not a clear trend. All right, we can actually trade this one. We can trade this one. All right, we can trade it. Okay, if had it been we traded it, we could make probably we enter the market right here. We could make 70 pips from the market. You get it? So that is how you trade the market. It's very, very important, and it's very, very simple. It's a simple way to trade. All right, but you have to be very careful. And I think I'll give you one more tip. I'll give you let me add another indicator. Let me add another indicator, probably 50 moving average, so we can use this for our direction. Okay, the 50 moving average. All right, let me add the 50 moving average. Okay, the 50 moving average. Okay, this is it. All right, the 50 moving average. Okay, the way is to be a simple moving average. All right, apply to close. All right, apply to close. All right, then we set it up. Okay, let me change the color. The color should be something else. Which color should we use right now? Okay, let's use this. Okay, let's see how it goes. Okay, I have a green there, right? I have a green already. So let's change it. I'm looking for a good color, right? I'm colorblind. Mind me. Okay. All right. Okay. This is our 50 moving average. All right. It will help us to know the trend of the market. You see, right here we have a downtrend. Right here we have a downtrend. So if we want to enter the market, we can enter the market around here. Around here. You see it when there is a crossover, the second bar chart formed. The bar that is formed, we can enter the market right here. We'll milk the market down to this point, right about 110 pips also. So it's always 1-3 reward ratio. All right, don't overdo it. Don't overdo it. Okay, don't overdo it, because when you overdo it, you probably lose money. All right, you lose money. Okay, please don't try to overdo that. Okay, all right, that's that. Okay, we can try it out with a lot of assets. Okay, let's try it out with the boom 1000 index. Okay, just watch this. Watch this miracle. This is actually miracle. All right, you just watch it. Watch it right here. Right here. Come over here. See what we have. Boom. We have 300 pips. Are you with me? And we're just risking 45 pips. 300 pips to get 45. 45 to get 300. Okay, watch this right here. I think I took this market. I took this trade. I made some profit from this trade. Right, I made about 200 and something p 200 and something dollars from this market. You see another one right here, another one right here, another one right here. Okay, see another one right here. You make up to 100 pips, then your stop loss should be the immediate low, okay, which is around here, which is about $5, 5 pips. Okay, so that's how you trade the market using this strategy. This is a very important strategy. You can as well use it for your VIX, your Euro USD. Let's look at Euro USD. Please don't mind me. I'm trying to click this, but I think, let's see, Euro USD. Okay, let's look at gold. I don't know what's happening to my Euro USD chart. Okay, this is my gold chart, and I've not really backtested it on gold, but as you can see, it's working, but not on a consolidation market. You see it, it's consolidating. So had it been one entered the market, would have done that right here, and would have taken all of this, about 13 pips of the market. All right, so that's how to trade it. Let's look at VIX 100 or VIX 100. Okay, 101x. Okay, you see, very efficient, watch, very efficient, okay, very efficient. Watch this. Once you see this crossover, oh, you don't have to wait. Come on, see this. So that's how you trade it. You see this one too, right here. Pew. Oh, there, up there. You see, we got it. So all these ones are false signals. If you watch very well, right here, watch very well right here. It's a false signal. You don't have to trade. Okay. Then when you come down right here, see this one too. See, very good market. See, we're looking for that break after the consolidation. All right, we're looking at taking the market right here. We're looking at taking the market right here, just right here. See, pew, all the way up here, about 200 pips. So that's how to trade the market. Remember, the best time frame is 30 minutes time and 1 hour time frame. So go out right there this week, milk the market, and come back with testimonies. All right. I love you guys. See you in my next video. No, my next live video will be on price action. All right. And don't forget to subscribe and like our channel. All right. And from next week, you'll be following us on our live profile account. So want to try something this time around, want to flip 5K dollar account. Want to see how we can flip it within a couple of weeks. Okay. Thank you so much. See you in the next video.